My name is Janice Musselwhite, and I've been with Gabelli Funds for 20 years. I'm just going to take a quick 30 seconds to introduce our portfolio managers who will be presenting this morning. Max Sykes will spend some time talking about opportunities in financial services. Max Sykes is a portfolio manager of the Gabelli Dividend and Income Trust, the Gabelli Equity Trust, and for separate accounts. He is also the sole portfolio manager for the Gabelli Financial Services and Opportunities ETF. Listed on the NYSE. Mac was ranked #1 investment services analyst by the Wall Street Journal in 2010, and he also heads up our value investing conference in Omaha. That's alongside the Berkshire Hathaway annual meeting.
It's nice to be here today. Again, my name is Max Sykes from Gabelli. It's a little bit about me. I joined the firm in 2008 to cover financial services. So you can imagine just how much I love my job, right into the teeth of financial crisis. And I just love our investment culture. I love picking stocks, and I love the vertical that I'm in. So we follow Warren Buffett like a lot of investors, and he often talks about the American tailwind. And this is the basis for the fund and the idea that there's this tremendous American growth, that is consumer wealth, assets, etc. And this helps drive the tailwinds for financial services. And within that, we look at major themes, which I'll go over in a second. But these are significant long-term themes driving earnings growth for a lot of these firms that we're invested in. And of course, technology innovation, which we'll go over in a second, but that's helping to drive the returns as well. So one way to measure the American tailwind is by U.S. household wealth. And when Warren talks about compounding, you can see it very clearly here. And so, rising from 5 trillion, it's actually over 170 trillion today, compounding 34x over that time period. And all of the stuff that's in place now in terms of the innovation, the growth, the energy, all that stuff is in place to continue that trend going forward. So we feel very confident in the backbone of what's driving financial services. How many of you are involved with wealth today? Raise your hand. Okay, so everybody knows about this big theme that's coming through our whole industry. It's very dramatic, obviously, with my generation. And so this huge transfer of wealth will bring about a number of important characteristics to the industry, as you all know. First of all, wealth advisory, asset management, and innovation as well, in terms of driving returns for investors, as well as making sure we achieve outcomes. So on the innovation side, we've seen the emergence of some of these great firms, Apollo, Blackstone, Blue Owl. And when you think about their combined assets today, it's about 2.3 trillion for these three asset managers, okay? And I think the wealth assets globally are about 128 trillion. And to the extent that there's more access to these private assets, the democratization of some of their products, just a slight shift, 1% shift of the 128 trillion will be extraordinarily meaningful to these institutions. And so we see long-term secular trends over the next decade for these firms, similar to what we've seen through innovation, access, and as you all know, there's movement in Congress today to change some of the rules around the private investors and getting access to these funds. Digital payments is a big deal. I think it's well understood as well, so MasterCard and Visa. And so the combination of all these factors driving secular trends in payments, we like American Express in this space. You have a firm growing at 10% top line, 15% bottom line, against a U.S. economy growing at 2 to 3%. So very good returns in terms of going forward for American Express, trading at a multiple that's less than the S&P 500. So let's talk about the AI wave. And tomorrow you'll hear from my colleague, John Belton, who's done a lot of work in this space. We've really focused on it because I believe that it will be pretty transformational in terms of the winners and losers, and especially in the financial services industry. So first of all, there's a number of things that financial services will benefit from in terms of AI. They have large customer bases, so client engagement will be improved, obviously. Significant data pools to take advantage of, so proprietary data, and fixed installed platforms. So AI is going to cheapen access and all of the information systems that they run. So this will improve the efficiency. And you look at a firm like JP Morgan, who's significant tech spender among their group, huge platform, huge leverage to the AI transformation that's coming. And so we think there'll be an outsized winner in this space, and the firms that cannot keep up with tech spending will fall behind. So we think this is going to be a very big leverageable deal. And to the extent that we're all trying to figure out how to play AI, and you see these high multiple stocks, you can go to JP Morgan trading at 14 times earnings and get that benefit. So I run an actively managed ETF. It's one of two in the space, 100 in total competitively. We just achieved our 3-year track record, so we're pretty excited. We get to rated by Morningstar, and we're very happy with the progress. We did launch on the New York Stock Exchange 3 years ago. We got to ring the closing bell, which is very exciting. There's a little bit about what we own in the portfolio. So we consider this very high quality stocks: Berkshire, JP Morgan, Wells Fargo, Chubb. Familiar with a lot of these names. We see very good competitive secular dynamics with these names. We're very excited about the performance, and we see lots of good opportunity going forward. And in aggregate, for this portfolio, you're talking about a multiple significantly below the S&P 500, with earnings accretion over the next several years above the S&P 500. So relative value in aggregate better, and with also very diversified names. As we know, if we were to break up Berkshire Hathaway or JP Morgan, we have a number of S&P companies inside of that as well. So we see good diversification as well as leverage to this sector as well. So we were going to have Q&A, but I'd like to invite you back to our booth to meet the managers, Tony and I. And we'd love to follow up with you. And again, we also have a lot of white papers. I've done one on AI. John, as you'll hear tomorrow, has done some. And you can access through a website at Gabelli.com. And we're always trying to share our intellectual talent. Thank you.
You should consider the ETF's investment objectives, risks, charges, and expenses carefully before you invest. The ETF's prospectus is available from G. Distributors, LLC, a registered broker-dealer and FINRA member firm, and contains this and other information about the ETFs, and should be read carefully before investing. To obtain a prospectus, please call 888-GABELLI or visit https://www.gabelli.com/fund/ETFS/intro.